Now, the problem with that is A, you're losing money to inflation, right? Like if you're doing that, and B, what happens if something tragic happens to you while you're saving? Your goal, let's say your goal is to get to 6 months of savings. Let's say a little while into your plan, you got 3 months savings, have something tragic happen to you, like car accident or something like that, and your wife and kids or your husband and kids are standing there and they're not fully protected. And so when I say this is a self-completing plan, by saving inside of a life insurance policy, the natural benefit of this is that you get life insurance with it. Hey, what's going on, cash flow hackers? It's Chris with Life 180, and for this video, we're gonna be talking about the 3 reasons that I love the infinite banking concept. Now, before I get into the 3 reasons that I love infinite banking, let me first and foremost, for everybody who's new here, explain what infinite banking is. Now, there's a lot of information out there on the internet about infinite banking. Infinite banking is in fact probably the most common marketed term for, quite simply, what is a properly designed whole life insurance policy. Now, a lot of people are out there falsely talking about the fact that you can utilize index universal life with infinite banking, but in fact you cannot. So I've got other videos on that, so make sure you check those out to make sure that you're protected. If you want to learn more about infinite banking as a whole, I actually have an entire playlist dedicated to teaching you about infinite banking. Now, for the purpose of this video, what I will say, infinite banking is simply a properly designed whole life insurance policy that is utilizing that policy as the foundation of your financial life as a banking alternative. Instead of storing your money in banks, instead of utilizing banks for loans and all that, having your own financial system, kind of like what I call your own almost micro economy, to be able to help you eliminate the need for utilizing third-party banks or banks outside of your life, and taking control of the banking function and stopping the transfer of wealth from you and your personal economy over to the banks and Wall Street, and keeping control of that money in your own life. And for this video, I'm gonna get into the 3 major reasons that I love it. So let's go. I've got my new whiteboard here, and you can see I just got a nice fun list. I'm just having fun. I'm drawing this stuff out. So the number 1 reason is control. Control of your money is the number 1 attribute that successful people are looking for in their money. You talk to anybody that's successful, any real estate investors, any entrepreneurs, any major business owners, anything. Control is the number 1 attribute that they're looking for in their money. And it's the number 1 reason that I'm not a big fan of qualified plans, because when you put your money into a qualified plan, you are giving up control of that money until you're 59 and a half. Think about it this way. A lot of people have bought into the mindset of, I'm going to go to school, get a job, put my money in my 401k and let it sit there. And then hopefully I'll have enough when I retire. That's kind of the way that Americans have been duped into thinking. Now, think about it this way. 401ks, qualified plans, IRAs, those types of accounts, you can't touch those accounts without taxes, and the most important part is penalty until you're 59 and a half. So basically, when you contribute to those, I understand some people are okay with this, but I'm not. Because when you contribute to those, you're basically putting your money into a location that tells you you're not going to be able to be financially independent until you're 59 and a half, because if you do, we're going to take 10% of your wealth from you as a penalty for trying to be a really efficient saver, investor, whatever you want to call it, right? They're going to penalize you for doing so. Anything that's going to, on an almost guaranteed basis, keep me from reaching my financial goals sooner, I don't want to play part of that game. All right, so the second reason that I love infinite banking, whoa, it zoomed way in. It's a self-completing plan. So here's the thing, life insurance, a properly designed whole life insurance policy, is the only financial product on the face of the earth that will make sure what you want to happen will happen when you want it to happen, whether you're here to see it or not. Now, think about it this way. If we think about leveraging it as a banking alternative, we're not thinking about a properly designed or an infinite banking policy, whole life policy. We're not thinking about that policy as an investment. We're thinking about that policy as a savings alternative. Instead of keeping our money in a bank, we're keeping it in this policy, and we have liquidity, use, and control of that money to do what we want with it. Now, I'm not saying you can eliminate the bank altogether, because this is not quite as liquid as your bank account, where it will take you, let's say, 72 hours or so to get your money. Whereas a bank, obviously you got a debit card, and you got to have your bills kind of go through that way. Now, some people will say that they will go out and they'll put all their monthly bills on a credit card, and then they'll use policy loans to do that. I'm not the biggest believer in navigating that, but yeah, it is what it is. Like, this is a self-completing plan. And the reason I was going down this path of talking about this is because of the fact that when we look at a savings account, I'm a big believer everybody needs an emergency fund and an opportunity fund saved up. So the question is, where do most people keep their emergency funds? They keep it in a savings account at your local bank or credit union. Now, the problem with that is A, you're losing money to inflation, right? Like if you're doing that, and B, what happens if something tragic happens to you while you're saving? Your goal, let's say your goal is to get to 6 months of savings. Let's say a little while into your plan, you got 3 months savings, and you have something tragic happen to you, like car accident or something like that, and your wife and kids or your husband and kids are standing there, and they're not fully protected. And so when I say this is a self-completing plan, by saving inside of a life insurance policy, the natural benefit of this is that you get life insurance with it. And so when you have life insurance with it, that 3 months of income can turn into 10 years of income, just like that, right? And so that is an amazing leveraged component. I always say it's the best way to get each dollar that goes through your life to perform more than one function. And that self-completing plan is a big part of it. So now, when we go to the third reason, is that it's a long-term preservation of capital. Now, right now we live in this world where interest rates are going up. Inflation is really high. At the time I'm filming this, it's 8.6%. It could go a little higher. It might start to drop. But if we look historically, life insurance companies, saving your money inside of life insurance companies is the best way to keep liquid, accessible capital beating inflation from a long-term perspective. Now, I'm not gonna sit here and blow smoke and tell you that it's gonna beat inflation this year, that you're gonna be able to just put your money in there and it's gonna beat 8.6%, because that's not the case. We always have to be thinking long-term. One of my favorite quotes of all time is people way overestimate what they can accomplish in a year, and they way underestimate what they can accomplish in a decade. And so when you go through that lens and that way of thinking, when you do infinite banking, it's simply a financial system that you run all your financial decisions through. And when you do this effectively for a long period of time, you can accomplish way more than you think. Life insurance companies are not great at taking risks and getting massive returns. What they are great at is managing risk, managing preservation of capital, which is simply saying they're going to keep the purchasing power of your money intact. And if they can do that in as guaranteed a basis as possible, and they have the ability to get a little edge above and beyond that, then they're going to go out and try to get you a little bit of a return above and beyond that. But their main focus is preservation of capital. And that is not a small deal when it comes to people's money. I'm a big believer that the biggest reason people are struggling in this world is because of the fact that they have their financial life structured improperly. They go out, they take too much risk too early. And I'm a big believer that if everybody was born with a whole life policy, or everybody started a whole life policy when they were a kid or when they were a young adult, and they got a policy before they needed a policy, and they designed that policy properly, this world would be a completely different place, and people's habits and relationship with money would be completely different. But at the end of the day, these are the three biggest reasons. When I thought about what are the three biggest reasons, if I had to break it down really simply, this is why, because it gives you control of your money, and I could literally do 10 reasons each one of these is so important, right? But it gives you control of your money, it's a self-completing plan, and ultimately, it's the preservation of your capital and the importance of the purchasing power of that and how that can impact every other decision that you make with your money is extremely important. So if you have any questions, go ahead and comment in the comment section below. If you haven't already, go ahead and subscribe to the channel, hit the bell, that way you get notified every time I launch a new video. And that's it for this one. Till next video, have a blessed, inspirational day. We'll talk soon. See ya.